Hey folks, Vic here with your weekly trade video for the week ending Friday, October the 22nd, 2021. You know, we all want to get as much reward as possible for the risk that we take on with trading the Forex. But how do we do that, right? Well, that's the subject of this video, and I'll show you some examples of what we do, how we analyze the price action, and how we set trades up for really good potential. And when I say we, I mean myself, and I'm Vic Noble, and I run our short-term trading service, and my partner, Darko Ali, who runs our longer-term trading service, which is swing trading up to position trading. And in this video, I'll show you examples of great reward risk trades. That's a bit of a tongue twister. Both with long-term trading and short-term trading. And getting great reward risk trades means you don't have to rely on high accuracy to do well. There are different ways to trade the different, to trade the Forex, meaning different Forex styles of trading. So there's short-term trading all the way up to position trading. And it's very, very important that a trader honestly identifies who they are before taking on a trading campaign. Because like if you have a day job or other obligations, short-term trading isn't going to work for you. Conversely, if you have time availability and the right personality profile, short-term trading can be very lucrative, especially for smaller accounts where the pip risk is kept very small. So let's get to some examples and how the reward risk plays out for both short-term and long-term trades. And if you like this video, please give it a thumbs up. I'd really appreciate that by hitting the like button, and be sure to subscribe to our channel by hitting the subscribe button in the bottom right corner of the video. Alrighty, let's take a look. Okay, so this first trade is one that Darko showed in his pre-market analysis video to the members of that service, and that's his long-term trading service, and this is using the monthly, weekly, and daily chart. Okay, so take a look and see what went on right here. This is actually a yearly chart. Now he just put that on for illustration, but you can just see that last year was a pretty negative year. This is the Euro-Australian dollar pair, by the way. This is a monthly chart, this is a weekly chart down in the lower left, and then this is a daily chart. And now this is, and you know, he'll use different time frame combinations for swing trades. And but in any event, I want to just show you what happens here. By analyzing these higher time frames, this is a very good level. You see how this is a monthly chart. These are serious levels, monthly levels. I mean, that's strong. And notice how price broke below it, rallied up, came back, and what are you going to do? Well, nothing. We don't know what price is going to do until this candle right here. It made a little doji up there. So now what? Well, go look at the weekly chart down here. What's it doing? Well, it comes up. Here's that. This dotted line here is the same level down here. Okay, it goes up, has a little fake out move here, and comes back down again, and rallies back up. Is it going to go down? We don't know. But look at this candle here. Another one of these little spinning top candles here. Now go to your daily chart. What did it do? When this little candle happened here, it was right in here on the daily chart. So price rallied and came all the way back down, hit this level, and held, and came down and closed the week down into here. So the sell was back up into here. He had a high stop loss. He actually put it not above this high. He actually put it above another high over here. In any event, it was 130 pip stop loss. It gives it, this is longer term trading, and it gives it lots of room. And this is the move down. Where do you take profit? You don't take profit when you're up 20 pips and 30 pips on these guys. You use your higher time frames, and because of this whole negative chart, he used this. Look at this. This is an hourly level of support. Look left. You see all this? We didn't make that up. The market showed us that. Price comes down to here. This dotted line is what you see down here and down here. That was a 700 pip move. Okay, that's a reward risk of over 5.3 to 1, and that trade lasted about 3 weeks, maybe a little bit more. Now the fact is, you need to be an impeccable trade manager. And when you're trading longer term like this, and you have a trade, this is called a hands-off trade, because you're trading with all the higher time frame pressure. The worst thing you can do is over-manage the trade. The whole idea of long-term trading is that you don't need to micromanage the trades. That's the beauty of them. Because if you micromanage these, you're going to end up taking small profits, right? And full losses, which is a losing combination. So again, the right mindset is a must, together with a solid understanding of trade management. Okay. Now, how about short-term trading? Well, let me just get rid of this one here, and we'll look at this. Now, this is the euro-yen pair. How do we get a big reward risk trade with short-term trading? Well, the nice thing about short-term trading is that the pip risk is very, very small compared to longer-term trading. So short-term trading is really ideal for traders who have the time to be at their computers during active trading, and also for those traders with a smaller trading account. But make no mistake about it, if you don't understand what you're doing, short-term trading can eat up your account very quickly. Okay, you gotta figure it out. You gotta know what you're doing before you do it. So of course the same thing applies to longer-term trading. You absolutely must take the time. I just can't emphasize this enough. Take the time, make the effort to understand how the process works. I can guarantee you that shortcuts don't work. People try them, I know. But that's why in both of our services we have a comprehensive set of videos that explains exactly how we trade. But, you know, human nature being what it is, and the desire to, get rich quick, people do start trading before they should, without having a clear understanding of what we do and without a clear trading plan. But anyway, that's another story. So again, for short-term trading, we don't need to risk a lot of pips. Therefore, you can trade more lots and still maintain very small account risk. We suggest no more than about 0.5% account risk. That's it. Okay, not only that, with small pip risk, you can very quickly get a nice reward risk. So let's take a look at an example. This is just from the past week. It's on the euro-yen pair. Look here. This is a daily chart in my upper right. Super strong daily uptrend. Okay? And so we're in a very, very strong uptrend. And this trade that took place was in here. Okay, not today. There's a drop down today, but that's another story. But we're having a pullback in an uptrend, just so you know. Okay, so let's go back. Let's go down to our 4-hour chart, and this is what we do. So price, pulls back into here, and it starts to move up and starts trading above this. This is a daily level of resistance, and we start trading above it. If we go down to our 15-minute chart, 15-minute chart, the question is, do we have a pattern that tells us that price is telling us to start looking to buy? Yeah, we sure do. Here's the day in question where the trade took place. But at the end of the prior day, we come up to here and down, and this is way past the London close now. And price, we don't like to, this is a rollover, this dotted line, this vertical line. We don't trade in here. We just leave that alone. And because the pip spreads get really wide in here and are very dangerous, it's very dangerous to trade in there because you can get stopped out just from the widening spread. So this is a few hours have gone by. Price goes up and down like this between this high and this low, never got taken out. And then look at this. We have this break higher. Above this high in here, above this high over here, that's a strong break. We look to be a buyer back at support. And this is a really nice place to put your stop under here, which is the volatility stop was actually below the natural stop, which is great. And this is the move up. Now we're talking here, and this needed an 11 pip risk. Where do you take profit? Well, there's different ways to take it. Some people like to use the Fibonacci extension level. That's just right here. That little move alone was a 4-to-1 reward risk. And don't forget, this just takes a few hours to get that. Okay? Because we're in a very, very strong uptrend, you may elect to say, I'm going to go for the next opposing daily level. That also got hit. And that would have had to have been held overnight. And you can do that with a scalp. I mean, you can get into a scalp, a short-term trade like a scalp, but you're trading in alignment with the long-term higher time frame, the trend, which is going up. It actually went up and hit this level. What a good level that was. I mean, these levels that we pick are usually pretty darn good. That becomes about a 7-to-1 reward risk trade right there. See? So those are both great examples of high reward risk trades, but with two completely different trading styles. Okay, there's no right or wrong. They both work very effectively, but the big question is, which one is right for you, your situation, and your personality profile. So both of these trades worked out very nicely, but obviously that's not always the case, right? Sometimes they lose, and you can take a full loss for sure. But generally, we are able to mitigate the loss with trade management strategies that keep us from taking on a full loss, and we cover that in the content that's provided for our members. But the video should give you a decent idea of how the reward to risk can work using different trading styles. And this is a superficial look, because once you're in a trade, there's always more to it. And I'm talking mostly from a psychological standpoint, which is another subject. Both of these styles of trading work very well. The big question for you as a trader is to honestly assess your own situation and decide which approach is best suited for you, like, you and your situation. And once you decide that, you need to commit to learning it step by step. I know this sounds obvious, but to be dead honest, very few people take the time and the effort necessary to become proficient. And it's kind of like that, the same thing with everything, isn't it? Like, how many people, start a diet and they quit, or start to learn to play the guitar or any instrument, but they give up? How many people start a fitness program only to drop it after a short time, okay? And this goes on. And it's the same thing with learning to trade. But the good news is, for those who persist, the rewards are waiting for them. It can be very, very lucrative. So I'll leave it at that. If you need to ask any questions about what we do, what we provide, anything like that, just shoot me an email. I'd be very happy to get back to you. Thank you so much. And again, don't forget to hit the like button, subscribe to our channel. Have a great weekend, everyone. See you next week with another trading video. Take care.